Hello guys, it's Max here from Daily Market Movements, and just before I start today's video I just have some big news I would like to share with you all. Our channel has just reached 5,000 subscribers, so to say a huge thank you from myself and the rest of the team here at Daily Market Movements. We are now launching a 25% trading signal sale. Instead of the original price of $199 for a year's membership, we're only charging $150. This is going to be valid until Sunday, so if you've been watching our videos for some time now and you want to get involved and make money with us, and then please do not hesitate. You can visit our website www.dailymarketmovements.com. The website link is below this video in the description, and there you will find our signal sale where you will find a price of $150 instead of $199. So in front of me is the gold over the US dollar chart, and as you can see today we have been trading towards the downside. Gold has been pressured, but you know this is a typical move from gold. The beginning of the week, Monday and Tuesday, we do typically see a bit of pressure on the precious metal. However, Wednesday, Thursday and Friday we do then see some upside movement. Personally, I think that gold is about to explode towards the upside at 17.95. I think it's overdue, and I think that we will see it any time now. We have been in this holding pattern since the 13th of April, and now, you know, it's nearly the end of May, so we have been in this holding pattern now for just over a month and a half, and I think that we're just slowly building up the momentum to then push towards the 2012, the 8-year highs at 1800 or 1975. Sorry, at $17.95. So what to look for in tomorrow's trading session? Well, I think that, as I mentioned before, the buyers will come back into the market. So as long as we don't trade below $1,700, I think $1,700 is now the floor where I've marked with this grey line. As long as we don't breach that level, we are in a bullish position here with gold. If we break below 1700 and we get the daily close below that mark there, then that changes things. However, as long as we're trading above 1700, I am bullish for gold, and tomorrow I would look for the bulls to step back into this market and push gold higher. Last week we had hedge funds and banks increase their net long positions with gold, so this is a very bullish side as they're a very bullish signal as they're building up their positions in gold. And also I just want to identify something which is really interesting for gold. If we go back 1 year to the end of May 2019, as you can see, this period here, this was May in 2019, and as you can see, the last week of May we exploded to the upside. Just a couple of days before the month of May ended, we broke out of this kind of zone that we'd been trading in for some time, for pretty much the whole month. And it's a very similar story to what we're seeing now with gold. You know, we've been in this holding pattern, and as you can see, the last week of May we exploded to the upside, and June and July are typically very bullish months for the precious metal, and as you can see, in June and July we surged nearly $200 towards the upside. So this is a very bullish signal for gold, but you know, we could potentially do the exact same thing this year. So as I mentioned before, I'm very bullish short-term and long-term in gold. Any pullbacks like the one that we're seeing today should be bought. This is a gift. This is great value for gold. I said we'd be extremely lucky if gold went back down to 1700, and we have. So take advantage, buy it on this dip. You know, 1700 to 1720 is great value for gold, and later on in the week I am sure that the bulls will step back into this market and try and push it upwards. And you know, the beginning of beginning of June, I do believe that we will see gold trading back towards the highs of last week, where we were trading on Monday back at that 1764. And once we can break above that level, we're going to 1800. It's as simple as that. In terms of the RSI, we're currently at 53, so we're neither overbought or oversold, and the market has plenty of territory to run in either direction, both ways.